Hello guys, welcome to the Trading Parrot. We're gonna do a general market update including dollar, gold, indices, stocks and everything. On Friday the situation was pretty tense with the correction due to fears around the tariffs. There's a lot of more than that going on at the moment and I want to discuss it with you guys. We've been following the dollar since July, expecting a bounce from the multi-year support. That's pretty much where we are, and on Friday we closed down with the dollar right there breaking out on the weekly. It has already achieved our conservative target of 50 RSI of weekly, and we've been talking about potential continuation of this setup in here. Why is that? Because this is a double bottom formation with bullish divergences accumulating across multiple oscillators right at the multi-year support. With a breakout candle confirmed, we should be expecting potentially in a conservative wave an extension into maybe $100 or beyond. We also have an extended setup that points towards $105, but we take it one step at a time. Now, if you want to be ahead of the traders that typically trade the breakout, the support was your best call. Now, below that resistance of 98 was second good alternative, not as good as the multi-year support, of course. But then if we go beyond $100, we open the door for an extended move even into 105. The largest gold ETF, GLD, posted $12.5 billion in volume on Thursday. That's the second highest on record. The only time it reached that level was in 2013. By comparison, during April's gold rally, daily volume peaked at 11 billion. And on Thursday, the volume was also higher than most of the Magnificent 7 stocks. Demand for gold assets is incredibly strong at the moment. The most recent all-time high of gold is 4.176, and that came in on Monday together with the confirmed breakout over a resistance of RSI 80. We broke out on gold from 80. That is just crazy. And I have to say, I was expecting a rejection from here since we already have bearish divergences. This breakout was incredible from the green line in here. And in my opinion, although I confirm that is a confirmed breakout on the weekly, I do not like to take breakouts beyond 80, not even beyond 70. We are basically expecting the RSI to go now into what? The 100 levels, the 90 levels, which are very rare, are possible on the weekly time frame for sure. There is a bearish potential setup, which is if gold comes back here and it loses that level, turns this into resistance, that way it could turn very interesting for a short. But so far in here, this could hold and go into the 90s, taking down a lot of traders. Now, if we look at the liquidity on gold, you can see that we are running not necessarily driven by that, because at these highs, looking at the daily time frame, I do not see any liquidity. We are at all-time highs. We are in price discovery. That is a natural thing to expect. It happens to Bitcoin when it went beyond 74K. After we hit the last squeeze of liquidity from shorts, price is just freely flying. And at that point, what we focus on is, can we find something very substantial? And although I'm looking at silver, the story remains pretty much the same. We do not have much liquidity on the lower end. The biggest on the lower end is 3.223, and something was sounding a bit itchy because I remember talking about a liquidity beyond 4K, and in here we have the 4.3. We just took the 4,000, and that is the last squeeze that we could affect the shorts. Sorry about the confusion. CTAs are projected to sell stocks in every single scenario over the next week to a month, whether it's a 2 standard deviation, down 1 standard deviation, or more than that. Everything is pretty much pointing towards a more conservative or bearish stance against the market. And we were looking at silver before. We'll look again into that. The one that didn't have any liquidity on the top end at the moment is in a full price discovery, but actually beyond what gold has done from that point of view, because gold still has one bucket of liquidity heavy from shorts at 4.342, but silver is already running fully dry. Yeah, there is liquidity, there always is, but there is no pool, nothing really allocated that can give us high conviction that we are going after that. This is how the market is looking now, but we really close with pretty much everything in the red on Friday. Nasdaq is stuck around the levels slightly below the all-time high at 24,500, and the S&P is slightly looking in the red in pre-market prices, 657 versus the close on Friday of 663. And it's looking a lot like Nikkei around this area in here could potentially consider a breakdown from there. We were looking for one the past week, but we got bought up. The yields 10-year on Japanese stocks, Japanese bonds, is pointing down after the breakout. It's kind of correcting in the same way. Possibly that could be the retest of additional move to the upside. Russell has a breakdown confirmed this week. And remember who copies a lot of the Russell in terms of price action? That's Ethereum. So keep an eye on this breakdown on Russell. You can overlap it in a chart against Ethereum. It's crazy how much they look alike. Today, the Fed Chair Powell will speak at 12:20 p.m. ET time on economic outlook and monetary policy. Will he mention the rate cuts? Let's go into the rate cuts. And on poly market, we got 92% of 25 basis points. 50 basis points are sitting at 2.9, no change at 6%. And for the 29th of October, looking at the Fed Watch tool, we can see now a 96.7 of 25 basis points, whereas a no change of 3.3. The 50 basis points is not currently appearing in this tool. On Friday, we had a little bit of a bounce of the Fed in here, adding to their balance sheet. What is interesting about this move up is not the proportions, because it's very small, but it's just doing that at the extension of one after having broken down from a bear flag. So this is the first time that they add since mid-July, and that is what currently makes it interesting, particularly around these areas of the extension, which could mean that maybe it's due for a bounce from these levels of potential support that we held around January in 2023, or if we're gonna put a new lower low, then we're looking at 2.6 trillion, and that means still reducing 400 billion additional. It's very important that we understand where are we standing with the Federal Reserve balance sheet, because when they start adding aggressively, Bitcoin can have another move up. And you can see that I pay more attention to that one versus the global M2, because M2, in my opinion, has a 50% chance of really telling us where we are going. You can see that this one is adding all the way up until March 2022. And if you were buying at that point from 69, you end up at half the price looking for an exit. So that's a 50% loss thanks to your stupid M2. So M2 works, yes. It's a condition needed to move up pretty much all the time. Is it sufficient to sustain a move up in a bull market? No, my friend. It can go up and the price goes down too. How often? In every cycle, it goes up in the blow of top at the end of the market. And guess what? All the other channels are talking and saying that it can sustain the move up. I don't agree. US-China trade war is the top one thing rank that is affecting currently the price. It's a 4 out of 10 in terms of bearishness. The Fed guidance coming in today as well is very important. Fresh markets today reinforce easing bias. Hopefully that's going to act like a 7 out of 10. Maybe it's a bullish one. Together with the rate cut odds increasing. Labor market claims softening trend and change. Estimates updates last few days is a 6. Official data posted by the shutdown that apparently continues. The gap between Americans saying jobs are plentiful and hard to get fell to 7-8%. That means that there is a full divergence between these two opinions. This is the weakest reading in 8 years outside 2020 pandemic spike. Historically, this measure being a leading indicator of unemployment, suggesting higher jobless claims are coming ahead. And they are expecting the government shutdown to last for at least 36 days according to this particular poll. The longer it lasts, the longer they can hold some data from coming in. And if we assume that maybe we got coming in something weak in the jobless that supports that rate cut, we got a very interesting equation of what information is going to become public, whether manipulated or not, the timing, and all of that against 29th of October expected FOMC meeting. And that's why people are looking at what is Powell going to say today. September CPI delayed to October 24th is also important. That is also qualified as a mild bullish signal. PPI coming in on Thursday could be a neutral one, event approaching near-term volatility risk. That's it. Geopolitical has come down in the ranking of things that are influencing more the macro. And something that is not mentioned there, but I still think that we should be paying attention to, is what's going on with the Japanese yen against the US dollar. We were anticipating the dollar taking over a little bit, and it's currently happening. But I want to keep an eye on this particular ticker, the Japanese yen against US dollar, because that could signify or give us a hint of where could the dollar slow down. And more importantly, after it slows down at 100 or at 105, will it break the multi-year support and continue to the downside, weakening the strength of the dollar? We did get, guys, a breakout of the VIX. We are now at 21, coming from around 15. We still don't break beyond that 25. That 25 has been the sweet spot where we can clearly see that is a big spike, that is big volatility, and that is dangerous for any assets. It's too much. And so far we've been expanding in this direction, right? So we need to be very careful on the lookout for a push into 90s in here. Remember, the last time we did that was in March 2020. Where we pick at 88, I think is within the range to go very high if we get some massive event in the general markets. I do not know when it's going to happen, but we have some bullish divergences indicating that at least where we are achieving now, 21 to 25, was incoming. Now, if we see this going beyond the 25, that's where I start getting itchy and thinking, this might be hinting that we are due for a big spike again, a third one. So let's see what the big stocks are saying. Google is breaking down from this support in here on the weekly. Apple still holding that support. We are further away. We were around 67, and I was telling you we are very deviated from support. Now we have reduced the gap in here by being at 59 with the support at 57. Nvidia already broke down, so we got double tops that we observed on Friday, and we got some breakdowns coming in. AMD managed to put a higher high on the RSI, so it dodged the bearish divergence in here. That is very good. But although this might not be a bearish divergence because both are pointing up, you can still say that this against that, assuming that it stops there, is the actual bearish divergence because price went higher but momentum couldn't follow up. At least so far it hasn't been able to do that. So that, together with the already massive breakdown in here into the median, is a sign of careful with AMD. If you're already in a long, big in profit, keep an eye, don't look away. And if you're considering to enter in a long, look for better opportunities. That will be my way of approaching this. Double topping here with Amazon with lower momentum, weakening, lower lows is also a sign of weakness with Hive in there. We still don't break the support of 216 though. That will be great if you are already in a short from the highs and you break the 216. That will be me reassurance. I wouldn't trade the breakdown though. Tesla, again, bearish divergences, double top, Palantir, similar story, bearish, Hive, bearish divergences. Nothing really changing that much. Microsoft breakdown, Meta as well with a retest confirmed, MicroStrategy below the support, GME on a channel up from the area of value at the moment. And Robinhood being rejected once again from 80. Let's see if this can break out like gold did in here, is a very low likely scenario. Don't get spoiled by gold doing that and think that any asset now can hit bearish divergences and break from 80 into 90s, because then you're trading what happens the least. You should be focusing on what happens the most, and if something does something unprecedented, just step aside and keep focusing on what happens the most, and you're going to be much better trader in the long run. Thanks so much for watching. I'll see you in the next one. Bye bye.